And that means we are now live here on our YouTube channel. It's Tackle Trading's Halftime Report, the daily show where we go through the markets one step at a time, top-down analysis style, as we break down the news, the price action, the charts, anything happen across financial markets that we find relevant, important, and interesting. Analyze it, give you guys some insights so you can better run your daily routine. Welcome, everybody. If you're a veteran of our community, hashtag Team Tackle right in the chat. Let's get those thumbs up going as well. Get the show out there and promoted. And if you're brand new to the channel, make sure you click subscribe, click the bell, come back and join us on a daily basis. Got Coach Tyler, got Coach Matt, myself here, Coach Tim. Let's start with the markets here. Tyler, how are you doing, sir?
We're back on top, Timmy. I dethroned Greg Holmes last night at the Trade Masters. As we say, all is right in the world. The market celebrated with a new all-time high, so you're welcome. You're welcome.
So Tyler's back on top and the market's back on top. I'm going to say those two are correlated.
They are correlated. There's no doubt about it. Do you know what's interesting is I did have a bad spell there the last couple of weeks. I'm just saying, if Mark wants this to keep going higher, he is going to keep me.
If Mark wants one crew to be in charge, he needs Tyler to run one crew.
I have no idea what that means, but it sounds good.
It means that you're the captain of the team. You're leading.
I'm not sure you want to be the leader of one crew.
You're out front. By the way, one crew might be pushing this market into an all-time high here pretty soon. I know the SPY is right there where you are. The ES contract kind of right near the resistance contract as well. What are you guys seeing here?
I'm still stuck on one crew achieving all-time highs simultaneously. Tyler, go ahead.
Well, look, it's such good follow through. Look at the last 5 bars. 1, 2, 3, 4, 5. Say what you will about the intraday volatility. We have not broken a prior day's low. And so credit to the bulls. Since Friday's rebound, we have gone up essentially every day, higher daily high, higher daily low. This is about as good as it gets from a candle perspective, day by day. I know it's been a little messy, but dude, it's strong. I mean, again, you go back to last week and you say, what did you want to see after Friday's reversal? You wanted to see follow through. How about follow through straight up to the highs? I mean, you had a couple of days here that made you wonder if resistance was going to come in, but forget it. S&P is at an all-time high, IWM's at an all-time high, the Dow is at an all-time high, and the NASDAQ's about to get, the bears just that bearish argument is pretty much shot. So bulls are winning the day here, Tim.
Mm-hmm. Matt, obviously, since last week when we had the volatility on Thursday, and then we stuck Friday, the market has been putting in these higher daily lows 5 days in a row, like Tyler's been talking about, just bringing these candles back up the chart. On a day-by-day basis, one day it might be tech like it was on Tuesday, but then tech took the day off on Wednesday. But we've had healthy price action across the sectors as well. What are you seeing here in the S&P and just in the broad indexes?
I obviously that you're going to see a lot of news storylines today about S&P achieving all-time high, Russell breaking out all-time high. But I do think the storyline this week is basically us forgetting what we were talking about last week in the bond market. Literally, like, we just forgot that was a major storyline in the bond market. Mm-hmm. Like, wasn't that supposed to bring the entire market down?
I heard that rising yields were going to crash the market. Yep. In no any specific terms, but basically that was the tone I was getting from a lot of financial news outlets. That's sure. Yeah.
And I said that was silly from the very beginning. I thought that storyline was, quite frankly, a nothing burger for me at this point. But I do think the storyline, at least technically right now, is in the NASDAQ, is in the NQ. Yeah, you're achieving some good things in the Russell, you're achieving some good things in the S&P. But when I look at the NASDAQ right here and I see a bearish retracement, right? And you see these little signals that excite bears, right? You just know they get excited, right? And they start thinking, man, this time's going to be different. I got a nice little bearish downtrend. I got the theme playing out. I'm breaking the 50-day moving average, and we're going to retrace into that 50, and we're going to give you a nice little doji, and we're going to see another leg down. And then a random Thursday comes out when there's really no news, and Christine Lagarde says, you know what, we're not going to control the yield curve, but we're really going to control the yield curve, and the market blows that technical pattern out. I think the bears were looking at that doji yesterday in the NASDAQ and maybe getting a little bit excited. I think bears are looking at that doji saying, again, it happens again. It's consecutive over the last 10 years. The moment you think a bear's going to win something, the market comes out on a random Thursday without any real news and says, well, we're just going to, buy up everything today. I think that candle today really does blow out of the water the bearish argument in the NASDAQ right now.
Mm-hmm. Tyler, what about you? I mean, obviously, I want to take a look at a couple of timeframes here.
Now, don't get me wrong, very quickly. In the NASDAQ specifically, still got to achieve that 50 and that 9, no doubt about the 50 and the 20. Mm-hmm. But I'm taking this as a positive sign that's actually going to happen. I think the NASDAQ is going to play a little bit of catch up here.
Well, what you said yesterday, though, is where my head's at right now, Matt. You said it was a battle of different time frames, if you think about it. And really, the daily time frame was the best argument for bearish traders. And today, that is now being put into question. I do agree. It's not completely out of the woods. The weekly time frame, though, had a wonderful candlestick on it. And the intraday time frame now is going to be, interesting to look at as well. So, Tyler, can you break down those different time frames? Tell me what you're seeing.
Yeah. The other, just real quick, I want to break those down. When you look, I think some of these prior corrections are good analogs or good.
Tyler, very quickly, I was looking at the exact same pattern, the one
right
you first, that one right there, and that's the one that I'm kind of looking at saying, you break out of that 50, it's the same type of thing. It's the same type of emotion.
Correct. Yeah, and so it's like we really, outside of March, you could even go back, prior to 2020. You look at some of these corrections and it's like you get one down leg, you get a lower high, you get a second down leg. That's it, right? That's it. Forget it. Same thing here. You got a little more momentum on the second down leg, but it's like you lose faith, man. You lose faith if you're a bear because they just have not been able to get like 3 in a row on the downswings. So yes, but to your point yesterday, the weekly trend trumps the daily trend. Longer time frames are more significant than shorter time frames. And so one of the things that makes it difficult to get overly bearish on the daily is the weekly chart is so darn bullish. And so you get a more convincing argument if you get enough damage on the daily chart to also put in lower pivot lows on the weekly chart. Until you get that, you have this battle of time frames, like you said, where it's just tough. And you tack on the fact that all the other indexes are at all-time highs, and it's like, well, the NASDAQ's the lone man standing, and it's got a weekly uptrend. That's a tough spot for bears to be in and be confident with. So, yeah, the weekly chart looks great. Again, this week is such a rejection of what we saw last week, and it's resounding.
Yeah.
Mm-hmm. What about on the intraday time frame as well? Because there was a falling trend line on the intraday, and now obviously we're seeing some strength here today. It might be blowing that up just a little bit here. I mean, we're seeing price appreciation, that rounding bottom. It's pretty healthy right there as well. So it's kind of like everything's kind of coming into line, isn't it?
Yeah, let's take a look. So 30-minute I think is good. In general, you look at the relationship between the pivots. You're making lower pivots. You're making lower pivots, lower pivot lows. And then you start to turn, right? You're making higher pivot lows. You've got higher pivot highs. You're above all the moving averages on the 30-minute time frame. You can draw this a million different ways. I mean, you can connect the pivot highs from the peak. You can connect this one. Yeah, we're taking out trend lines and resistance levels left and right. It's just a matter of how much evidence do you need before you start to turn more constructive, right?
Mm-hmm. Well, and Tyler, just to go on the intraday, we're looking at the Qs here, and the Qs is where that storyline of inflation was really kind of playing out, and the rising yield curve was going to impact growth stocks a little bit more than it was going to impact the cyclical stocks or the value stocks out there. And so obviously there's going to be a lot higher volatility in the NASDAQ, since the NASDAQ was the main storyline there from a growth perspective. But if you'll take a look at the S&P chart, SPY on that same intraday time frame, the 30-minute chart, and you'll see something even slightly more constructive. And if you actually add the overnight action, so you can see the overnight action. So if you'll just go to like /ES to kind of break down the overnight action, and you'll see a very consistent intraday trend starting to form there. And so when you're looking at these the bottoms of the market and finding those low points of when you really start to kind of dip your toe in, start pushing the chips back in on the buy side, like we talked about last Thursday, last Friday, seeing that double bottom was kind of step one, right? Seeing the breakout of resistance at 37.80 and 37 and 38.840, those were step two and step three, and then you just start walking up the stairs, right? Once you establish that short-term support level, all of a sudden you're stair analysis. You're just walking up the stairs, higher highs, higher lows. And now today you're now starting to pick up additional momentum following breakouts in the S&P and in the Russell 2000 and the Dow Jones doing really well. I think this is a sign of a pretty stable and healthy market this week, quite frankly.
Well, and it's been orderly. That's the nice thing is sometimes it's not this orderly. And I know the intraday volatility has been tough, but when you back it out and you look at this, this is the entire week, right? On a 30-minute chart. And you'll notice it has been relatively orderly, making it easier to stick with a bull trade and not get shaken out as much.
Especially the last 2 days. Right. The further we get on that intraday from the volatility of last week, specifically last Thursday and Friday, you're getting more consistent price action. And that's a good thing as you're coming into this breakout in the S&P. And yes, you are range up and overextended in the short term, and volume's a little concerning, but you got to see this week as certainly a positive coming out of what the and it's not just the technical response, guys, it's the psychology of the market. Just think about the psychology of the market today versus where we were last week. Think about the conversations we were having last Thursday versus this Thursday. Vastly different market today.
Well, one other thing, so you mentioned now we're getting a little extended or whatever. The funny thing is like you can always come up with an excuse not to participate, right? So it's like I want all-time highs on everything first. Okay, now we're at all-time highs. No, but we're at 5 days. So give me a pullback now. And it's like, dude, pick a lane. You got to decide at some point, when are you going to start to increase exposure?
Well, take the conversations we've been having just the last couple of days. We were taking a look at Costco. We were taking a look at Walmart. We were taking a look at, some of the areas of the market that didn't participate, right? Take a look at, we're going to take a look at communications and the communication breakout later on today in the halftime report. But take a look at Activision. Right, Activision's not a great technical trend by no means, but I'm kind of interested above 94. 94, 95. Right. I'm kind of interested in that. Plus, it held up better than the other gamer stocks did. But yeah, you're right, Tyler. You're never going to get. Well, I don't want to say never, because there are times when these time frames align, and you're like, that it's just easy, right? It's just easy. This isn't easy. When increasing volatility, nothing in trading the last 2 weeks has been easy. It's been a complicated and a difficult and a very volatile environment that's been news driven. That's not been easy. Right. What has made it a little easier is at least for me, is understanding that the main storyline in the marketplace that is playing out, at least in my opinion, was a little foolhardy.
I agree. And Matt, you did mention the communications sector. I think right now would be a very good time to kind of look at that, because one thing we were having a discussion in pre-production here is, where the strength is within the sectors. We're getting pretty good movement across different areas of the market, no question about it. Tech's ripping today, discretionary is coming back today, but comms grabbed my attention the most because of the potential breakout. And Tyler, we put this on the option report last weekend as a candidate. I know you discussed it in the report and talked about some different ways you can play it, and it's just showing me something here. And then we went and looked at some of the individual components. So tell me what you're seeing here in communications, and I believe, Matt, you've got some stocks that you were going to highlight as well. But
I do think first of all, I like spotlight sectors. Like I like that. Maybe that's something we could do on a Thursday segment with Tyler, do a sector spotlight, right? And I like doing that. And so we were taking a look, coming into this week. And again, very difficult environment coming into this week, but, we did increase our rankings for finance, energy, industrials, communications, and we actually put those 4 ETFs on our options report this week. Once again, we like the technical patterns coming into there. Communications finally getting that breakout that we've been talking about, and the potential of that breakout. So yeah, communications was an area of the market that we thought was setting up for a potential breakout. We liked the fact that it held its head up in the volatility of the NASDAQ. And so with communications breaking out today, obviously we've talked a lot about energy recently. We've talked a lot about industrials recently. We've been all over finance recently, and we've been talking about comms. But I want to take a look at some of the industries here in comms and see if we can find some strength here with this breakout.
Yeah.
Can I mention one thing to preface this?
Yeah, go ahead, Tom.
And then we'll jump in. From a charting perspective, one thing I think is interesting is it took a couple of days for communications to break out. Tim mentioned this pre-show. We've seen the sectors kind of take turns a little bit. You'll note today financials are basically just taking a nap, right? Whereas they were stronger earlier in the week. Sometimes when you get these sector setups, and we highlight them on Friday or over the weekend, Monday didn't really do much. Tuesday didn't really do much. Yesterday tried to break out, couldn't do it. And then finally today, you had to wait 4 days for this to finally show up and do well. But it's doing well finally. And the pattern never broke. It was always in play the whole week. And finally the baton gets passed to communications. So I think just a reminder that you keep your eye on the pattern. Sometimes it takes patience, but if we're in a bull market, eventually it goes.
Yep.
Mm-hmm. Mm-hmm. And those sector highlights that as they've been moving day by day, it's creating a great environment for stock picking, for traders out there that know kind of what they're watching for. That's how we build our watch list. And I guarantee we're going to have some communication stocks on the reports this weekend. So Matt, what were some of the highlights that you've seen in the communication sector?
Number one, I enjoy being a top-down analyst.
Mm-hmm.
I mean, it just allows everybody's going to find their niche of how they navigate the marketplace and how they can make the market make sense to them, because sometimes the market disconnects itself from all reality and you have to be able to still be able to make sense to you, right? And so I like the top-down approach to the market, analyzing the market indexes, making sure your portfolio is always moving in the direction of your own personal bias towards the market. I love looking at different sectors and finding an edge in sectors and then breaking down the certain industries. And when you're looking at communications right now, obviously, comms kind of runs a little bit with tech. Remember, a lot of the names that are now in comms, they were kind of they were miscategorized for years and years and years. And we had a lot in tech, we had some in discretionary. And so a lot of these plays that are now in communications, they originate from discretionary. They originate from technology type companies. And so where they now are in comms, they obviously do run a little bit in the same circles as technology and discretionary companies. And so when you're looking at the discretionary sector in the last couple weeks, you see a sector that has just been very volatile. When you look at a technology sector, again, very volatile. But when you're looking at comms, companies like Google, even though Google hasn't broken out yet, it didn't participate in that type of volatility, and communications in general did not participate in the type of volatility that the market got caught up in to a certain extent. And so you got to like that about comms. You got to like the fact that it did not get caught up in the volatility that impacted the areas of the market that they have correlation with, and that is discretionary and technology to a certain extent. So when you're looking at comms, what I want to talk about today is I want to look at some of these potential these industries in comms to see if we can find some trades is basically what I want to do here today. And yes, comms is breaking out today with confirmation, and it is up over 2%. So you might want to see how it navigates tomorrow, and maybe this is coming into the weekend and maybe Monday triggers. But again, putting them on the radar is always important in my opinion. So let's take a look at a couple stocks here, and let's first start with stocks that would be your traditional type companies that we think about from a communication perspective. Now, once again, when you're thinking about communications, it's a hodgepodge of all these other different sectors that we categorized as communication companies. You have advertising companies, you have broadcasting companies, you have entertainment companies, internet content companies within the communication stratosphere. So looking at specifically those big names that typically get tied into communications, that would be your internet content and your entertainment companies. Let's take a look at some of your internet content companies. Let's take a look at Google here. One of the biggest names, obviously, in this space. Google. Google's been trading fairly similar to what's been happening in communications. The difference here, Tyler, comms breakout one day in front of Google's breakout. What do you got here on Google? Do you see a read here?
I see a couple of things. So first of all, you got to be impressed that Google held up a lot better than the NASDAQ. I mean, this is going to get lumped in with tech to a certain extent. If this did what the NASDAQ did, if this did what Amazon did, if this did what Apple did, it would have been down at $1,800. But it didn't. It held firm near the highs while everything else got beat up. You got to be impressed by that. Number two, I like the fact that the sector's breaking out. It tells me there's bullish sentiment around there, which I think increases the odds that Google breaks out. The third thing I'll say is Google is kind of a choppy stock, right?
Very much so.
And so I think you have to look at its tendency to pop and chop, pop and chop, pop and chop, which means I would be patient. You know, if like strategy wise and expectation wise, if I were going to play a breakout like this, given the nature of the stock, like this is not FCX, right? FCX, I'd be like, look, breaks 2,100, it's going to rip to 2,300. Let's do something. I'd probably be a little more patient with this, but I think you got to be interested.
I think it's a tough trade because it's like you said, it is choppy. It's a little bit more difficult to find. Okay, I'm going to trigger here, get a stop loss here. I think if you play Google, it's more in the spread type capacity, right?
Yep.
Bull calls if you want to be directional, you know, bull puts if you want to take the credit. But again, I do think you do have confidence there on Google, given that fact that it held up, but it's not performing better than the actual sector here. And so
True.
I want to take a step away from Google. I just want to bring, because it did maintain.
It's the big name.
It is a big name. But when you look at just internet content companies, you only have three of them. You have Facebook, you have Google, and you have Twitter, right? Facebook coming off the lows, coming up above 270. That's interesting. But to me, Facebook's interesting more longer term because of the 200-day moving average, very similar to Amazon, quite frankly, a little bit of prolonged neutrality, not really trading. I do want to have your take though on Twitter. Twitter has been a momentum stock up until the last couple of weeks, certainly got caught up in the volatility. If this market does recover, and it certainly does feel like it is doing that here early on, what about Twitter above 70? And again, I'm looking at specific industries here. We're going to look at other industries here in a second.
I think 70 is the obvious buy point. That's where you get through the last 5-6 days of chop, right? So from a trigger perspective, that is the obvious line in the sand. If you're looking to buy the dip in Twitter when it shows strength and gets its act together, I think 70 is the line, and I don't mind it.
Yeah, and looking at the entire sector, you have a few different industries here. Internet content is just one of those sectors. And again, there's only 3 stocks, but very popular names. But one thing I'm seeing in this sector, when you look at Twitter, when you look at Facebook, when you look at Google, there's not a good read on the industry. You got some real volatile action in Twitter. You got some choppy action in Google. And with Facebook, you got prolonged neutrality, right? You don't have an area of comms that is consistently performing the exact same way. And so it's going to be a little bit more difficult, right? So I probably, if you're looking at comms, I'd probably stay away a little bit from Twitter, Google, and Facebook, because they're just all a little bit different, all doing a little bit of their own thing, and it's a little bit of a difficult read here. Let's take a look at your entertainment side of communication, though, and this is where a lot of your brand names, the Disca, the Disneys, the Comcast of the world, the Viacoms of the world, the Netflix of the world, your entertainment, your streaming companies out there, right? So let's take a look at this area of the market. And first of all, Disney's very choppy, but again, keep an eye on $200 to close above there. And I'm thinking more weekly charts, longer term on Disney there. But again, I like that price action. And if we can navigate 200, Disney will have a little bit of momentum. But let's take a look at some of the areas that have, you know, seen momentum, did not get caught up in the volatility and forming perhaps some pretty decent trades. Let's take a look at Disca. Discovery here, a little bit of, I mean, momentum darling of the market, Disca here. Any hesitation, you know, crossover type analysis got gobbled up on breakouts, threatening another breakout off of a 2-3 day high base. Tyler, what do you think of Disca?
I think it's so incredible that this can only go down one day.
That's it. That's all you get.
It's just so strong. Because you would think, okay, Disca, you ran from 40 to 70. Can you give me, like, I don't know, 2 red bars? Nope.
No.
One right back up. Like, they're buying the crap out of this.
But not only that, Tyler, it's just one down day. I get it. But again, you look at the 4 days consecutively, you got a little bit of a hesitation high base.
You're right. So,
Right.
so it at least paused for a few days.
I would love a few more days.
Yep.
Right.
But yeah, I think the momentum's strong. I mean, look, I'm going to try to pick the top here. I mean, look how trendy this has been. Sure,
Yeah.
Buying breakouts has worked. I got no reason to second guess it. You got a stop loss if so, but yes, it's a good trade.
Okay, I like Disca there. Comcast, I like Disca a little bit more than Comcast, and simply put, Comcast needs a couple more days to hesitate.
Yes.
Right, just a couple more days, kind of do what Disca is doing there. Tackle 25 stock, Viacom, VIAC. That gave you 1 day.
It all looks almost exactly like Discovery.
Beautiful. It's very similar. So again, I do think they're aggressive momentum, but both Disca and Viacom breakouts here off the momentum they've been having. Again, if you're now just waking up, by the way, Viacom on the Tackle 25 at $35.
Mm-hmm.
Okay.
Yeah, it's had a pretty good couple
months. I'm willing to bet the $250 people have to pay for the Tackle 25 probably paid itself. Correct. On that one itself.
Yep.
But let's go back here very quickly. Can the momentum be traded here on Viacom, or do you like Disca a little better in the short term?
Ooh. The answer is
if I had to make you pick, I mean, there's sixes. I get it. But if you had to pick.
If I had to pick, I'd probably do the Disca just because it's closer to the pivot.
I think so too.
Yeah.
I like them both though. I like them both. And again, those two stocks, Disca, Disney, Comcast, Viacom, all very similar companies, all running on the same type of momentum. But I do think the leaders there are Disca and Viacom. And I like the Disca hesitation a little bit more than the Viacom one there. Let's take a look at some of your advertising agencies. There's only 2 stocks in this industry. You got IPG, which is overextended, needs some hesitation there. But you do have a potential hesitation high base in OMC, Tyler. Again, not a company most people know about, but still good trend over the course of the last month and a half. High base type analysis. What do you think here?
Pretty. I have never analyzed this company, but yeah, it's a pretty nice little high base or little pennant and breakouts if and buys. You know, so yeah, I like the development. It's clean.
All right, let's take a look at some broadcasting companies. And this is one of the areas with the entertainment side of it, but this is one of the areas that have been very strong for communications. There's really only 2 companies I want to take a look at. Fox is one of them, FOX, please. Nice little high base potential trigger above 40. Keep an eye on that. Another one day in the cooker, and that's on the report. But it might have a little bit of competition with the stock that's was on the list a few times in recent history on the stock of the options report, and that's News Corp, NWS. NWS. Yep.
Yeah.
Breakout.
So it was on the list this week, I think.
It was.
Yeah, nice little breakout. Secondary entry, what, should they get over the pivot maybe?
I think you can go now over today's high.
Yeah.
I think with the breakout yesterday, you couple that with the retest of support on the intraday today.
Yeah.
Right. You couple that. I think you can go. Right. I don't think you have to go above yesterday's high. I think you can pick your intraday level that you're comfortable with right now, but that's because of the slight support bounce they had today. But I do think you're fine on News Corp. Let's take a look at. Let's go to telecom services. This is your AT&Ts, your T-Mobiles, your Verizons, and your Lumen Technologies. Now, AT&T High Basin, slightly south of 30. This is not a company that anybody trades. It's a company you cash flow on. But I just wanted to bring up AT&T and remind people that you could have been doing 6 months worth of cover calls here on AT&T. Real good cover call stock. T-Mobile, volatile, doing nothing. Verizon's grotesque. But you do have a potential of the 4 potential plays in telecom services. LUMN setting up in a little bit of a short-term flag-based pattern here. The rest of this area, telecom services, again, dividend, boring, cover call. You know, my daughter be like, boomer much, right? That's T-Mobile, AT&T, and that's obviously Verizon. What do you think of LMN from a directional play here?
Yeah, I mean, if you want momentum, this is the place that's got it. Came into the year at $10. I mean, on that spike, come on, it's up 50%. It's 50%. You'll never see that on Verizon or AT&T in this short period of time. Volume patterns looks great too. The recent upswing here, nice accumulation coming in, light volume on the pullback so far. That's constructive. Yeah, that's constructive.
Well, so, and you know, when I'm looking at them and I'm saying, okay, you do have a directional play here if you want telecom services directional, but if you don't and you just want to keep it boring, AT&T seems pretty decent right here. Good dividend, really good liquidity for cover calls. Like the neutrality long term, but again, that's if you're looking more from the cash flow. And then last is electronic gaming, and gaming, you only have 3 stocks. You have Activision, EA, and Take-Two. Let's take a look at all 3 of them. Let's take a look at Take-Two first, actually, Tyler.
Yep.
Take-Two coming off of the lows, really fighting at that 200-day moving average. I don't think all 200-day moving averages are the same. Take-Two is testing one of those. Do you have any interest in Take-Two at the 200-day moving average?
I would have interest if I liked the company long term. I like other companies better than this long term. But
Activision.
Yeah, Activision. Yeah. So like if this was Activision and I loved the company, or if this was a Disney or something, then of course.
Yes.
But that's where you put on your more fundamental hat versus technical hat.
Yes.
You know. So
yeah, and that's why I said not all 200-day moving averages are the same. If it's a nice little fundamental thing that I feel has good value, yes, Take-Two. I don't have that opinion, and because of that, I like more strength here. I like trading into strength when you don't have value, and when you're looking at Take-Two, 200-day moving average bounce, I don't blame people for looking at that. But again, I want to see strength here. You take a look at EA and you're going to see a very similar type of analysis that you have on Take-Two. But Activision here, you know, held up a little bit more than its counterparts did in EA and Take-Two Entertainment. Activision kissing off, you know, holding above that 200-day moving average, holding its previous pivot before the gap on the earnings. I'm interested in Activision, but then again, I'm always interested in Activision. It would have to achieve 95, but what do you think? A little bit of a buy the dip candidate here, Tyler.
Kind of reminds me of the NASDAQ, where it's like, look, you don't think this bear retracement's going to work. You think ultimately it goes higher. It's just a matter of when you want to get involved.
Yeah.
I mean, look at the weekly. right? If you think, that daily's a little messy, to our little lesson yesterday, you zoom out. Like, look, if you like the company, what's not to like about a nice little pullback to the 20-week MA? And what's not to like about this week? It's a nice bullish reversal candle. So I think you can
compare
trade
that
quite a nice
against EA's weekly chart, and compare that against Take-Two's weekly chart.
Right. It's more compelling,
and
stronger.
it's more compelling. And so you would say Activision's weekly chart better than Take-Two's, and Take-Two's is better than EA's, right? But again, Activision leads here. And so if there's a little bit of a buy the dip candidate in this space, comms, I do think that buy the dip is Activision, quite frankly. Outside of that, I think there's quite a bit of high basis and strength forming up. I think we're going to have probably 3-4 stocks on our options report and stock report tomorrow in comms.
Mm-hmm. Yeah, I agree. As you guys are going through the industries and the stocks here, I'm already seeing several that I'm interested in, and I love the analysis. And this is a very, very, I believe, educational type of segment here. I hope people are learning out there, because we started with the sector, Matt, and then you're taking them through the industries, the individual components. This is, in essence, what top-down analysis is all about, and we talk about that all the time.
It's not as healthy to compare Activision against Apple as it is to compare Activision against Take-Two.
Mm-hmm. That's right.
Right.
That's right. I like it. I love it. And I love the weekly chart on that Activision there, Tyler. It definitely was a good, constructive looking chart, and great job there, guys. Wonderful. All right. Anything else on comps here, guys?
Well, just a quick point. If you look through the sector and you're like, I don't really find much I like, you can always play the ETF, right? That's always the low hanging fruit.
And it is a wonderful low-hanging fruit here, very constructive this week as we came back up.
And Tyler, it's not very often we put the sector ETF on the list, because we prefer individual plays because they can move a lot faster than the sector from a swing trade. But we were that compelled with communications this week to literally have comps on the options report.
Yeah.
Well, and I mean, maybe blind squirrel here finding a nut, but we did put 4 sectors. This was one of the only reports where we've had 4 sectors that had good patterns on the report.
Yeah.
Look what the market did. You're welcome. Okay.
And Tyler, in the face of everybody else saying the world was ending last week.
Yes.
Yeah.
So next time there are 4 individual sectors on the options report.
That should tell you something.
It should tell you something about the market health.
We like something.
Yes.
Yeah.
And it is carrying through here this week so far. Great job. Let's flash through commodities here next, if we can. Take a look at crude oil, gold, the dollar, and then Bitcoin. We're going to walk around the markets here. Tyler, let's start with crude. Tell me what you're seeing here. Obviously, we only had that little 2-day hesitation, flag-based pattern there. Now we're pushing towards the high again. What you read on the chart?
Dude, we're a freaking broken record on this. Like yesterday, talked about how the pullback was fine. It was just a garden variety retracement so far. And surprise, they bought the dip. A trend in motion stays in motion. I think one of the hardest parts of trading, Tim, is just don't overthink it. Okay. It's in an uptrend. Don't second guess every time you get a pullback. Don't talk yourself out of buying the dip. Most of the time it works. Not every time, but most of the time. You're seeing that again and again and again and again. Maybe crude tops at 68. Maybe it tops at 78. Maybe it tops at 88. Your focus and effort is better spent just saying, what's the trend? What's the path of least resistance? Give me a good entry point. Look, they bought the dip. It's great. You got a new pivot low. It's a higher pivot low. Trends be trending, I think was the phrase.
Trends be trending, and obviously crude has just been a juggernaut there. By the way, the entire energy space is looking very, very healthy right now. Gasoline is up like 50% in the last 2-3 months alone, and so is crude oil. They're all kind of following suit. Economy reopening, demand assumptions, all those kind of things behind the drive here. Let's flash and look at the metals markets next. Gold had a couple of days bouncing up off the lows here, but not exactly a chart that's out of the woods here. Dojing into a bearish retracement developing pattern. Tyler, what are you seeing here?
It's a start, right? So on the positive side, you're happy that it held that major weekly support at 1680. You're happy buyers at least showed up a little bit, but we've seen every bounce has sucked for a while in gold. So if you want to see a change in character, You need to see a change in character. You need to see the price not get puked up again and go back down to 1680. Give me a higher pivot low, Tim. Get base up here at the highs. Don't go right back to the lows. Give me something constructive to indicate that this is more than just a counter trend bounce to be sold. I think it could be the start of something. It could also just be another bounce in a long line of failed bounces. We don't know yet, but right now this is a bear retracement.
Charts like this, though, in products like gold, you kind of know this as a veteran investor and trader is very unlikely it's just going to rip. So it takes time to build that constructive price action, whether that is that little high base up near a resistance point so we can eventually build a breakout, or whether it's a higher pivot low or whatever it is. We've got some time here. There's a lot of work this chart needs to go through over the next weeks to months to actually build that constructive nature, don't you think?
Yeah, you're not going to miss it. You're not going to miss it. Yeah. The sentiment cannot turn on a dime on this thing. It just doesn't historically turn on a dime. And so you don't have to feel like, oh my gosh, if I don't buy gold here, I'm going to miss out. Yeah, right. It'll give you opportunities. So so far so good, but give me something more constructive.
I agree. I'll tell you one that is more constructive. Look at copper, and then specifically look at FCX here today, one of our preferred ways to play copper. We were talking about that pennant up there, and it is now very healthily moving up to the upside here today, breaking that little downtrend line you had on the intraday and on this daily chart pattern. Tyler, this is very, very constructive. What are you seeing here?
Yeah, I mean, we talked a little bit about this yesterday, and again, it's the same story that you look at the long-term chart, the trend is up. You assume that when you get consolidation, when you get a pause, what do the odds say? Do the odds say this is the top, or do the odds say it's just a pause that refreshes? Continuation pattern. The phrase that I like is continuations are common, reversals are rare. Continuation patterns are common, reversal patterns are rare. And so that is one of the reasons why we read charts, one of the reasons why we think there's value in technical analysis, because if you can be on the right side of the trend, it gives you a bit of an edge. So once again, just showing that a continuation pattern, or this pattern, is more likely to be continuation, i.e. a pause that refreshes higher, not the top in copper. It could still chop for a little bit, Tim, but yes, so far so good. It's starting to rip higher, and this is giving a green light to those that wanted to buy FCX, SCCO, and anything else that's connected to copper. It's good. So far, so good. And not surprising, risk assets are ripping today. Copper is a risk asset. It plays along with the whole reopening, greater demand for commodities, inflation. Why shouldn't it be going up?
Yeah, it's looking good. And like you mentioned, with SCCO or FCX, they're both obviously following suit there. That FCX move today, I mean, that's just ripping right out of that little triangle. So pullback, retracement, copper rips, FCX follows suit. Very, very healthy. I like it. Like it a lot.
Yep.
All right, the dollar next here, if we can. Dollar went up over the last couple of weeks. It's now coming back down, coming back into its range a little bit. Little 3-day hesitation. You could look at that and you could call it neutral if you want to, but there also is a higher pivot high in there, Tyler, and potentially a higher pivot low. Anything in the chart grab your attention?
Well, I think the correlation between this and stocks recently has been negative, where strong dollar has not been helpful for stocks. Weak dollar has been helpful for stocks. Now, could that be a short-term aberration? Maybe it changes. Yeah, maybe. But right now, that's the theme. So, Tim, I would like to boot stomp this thing and smack it down to 24 and just get a nice tailwind to this stock rally. I would prefer this not make a higher pivot low. So, yes, you're correct. It made a higher pivot high. Could this find some support and bounce and go higher? It certainly could. But I would prefer not. I would prefer this follow the path of the previous bounce attempts, previous trend reversal attempts, and just get smushed. I think that would be bullish for stocks, and particularly like emerging markets and foreign stocks. So my preference is keep smashing the thing. Maybe this was a scare and now we go back down. So we'll see, but that'd be my preference.
Well, and, Matt mentioned it earlier. We did get an ECB policy statement this morning. Basically, they reiterated their purchasing program, $2.2 trillion between now and March of 2022. And Christine Lagarde actually said, in her press conference, it was incredible, Tyler. She mentioned that yields are going higher. They're concerned about it. And so they're going to up their bond purchases, but then directly said, but we are not doing yield curve control. And I was just sitting there shaking my head. Well, if you're directly impacting the bond market so that you can bring yields down, that feels like yield curve control. But who knows? Who knows in the world we live in? I guess you can just say whatever you want. Nope, we're not doing that. Just look over here, look somewhere else. It is what it is.
Was the press able to ask questions?
I think there was a bunch of going on back and forth with it, and she continued to talk about it, but basically reiterated their programs. They're going to continue to purchase. They're going to up their bond purchases. She directly talked about where yields were in Europe, but nope, we're not doing yield curve control. So
it seems like that's the logical question. It's like, what kind of questions are you guys going to ask in this press conference? Like, wouldn't that like come to mind, like as an obvious?
You think? I think I could have pushed her on it. Yeah.
I don't know. I'm not that smart, but I feel like, oh, that's a good follow-up question to ask.
Yeah.
That's funny. So, but more of the same, right? I mean, it just shows they are committed to low rates, and that's stimulative for risk assets. And so, and the fact that they're freaking out over this little pop. I mean, I know percentage-wise it was big, but relative to where rates have been, 10-year yields been, it's like, dude, what are they're gonna lose their freaking minds if this thing goes to 3% or something like. Yeah.
And by the way, while we're on the dollar, two other economic data points. Well, not both of them are economic data points, but we did get weekly jobless claims come in. They were one of the lowest ones we've seen since the pandemic, but still very much elevated from last year. Market didn't really move much on the news, though. Don't really care about the jobs market right now in that regard. And it looks like President Biden's going to sign that stimulus bill this afternoon. That's been moving forward. We kind of all know that was going to happen. Looks like it actually is going to get signed by the president, later this afternoon. So let's look at Bitcoin next.
Just real quick on that note, Tim, can I just say, never have I loved my kids more than in the era of the last couple of years.
Sure. Hey, listen, kids are expensive, man. It is what it is. So if you're getting tax credits for those kids, I'm sure that you're going to be able to use that money to help raise them. I'm guessing, right?
I'm totally going to spend it on them.
Not going to happen. No.
I'm just kidding.
Give them a little taste. Give them a little something there. Bitcoin real quick, and then we're going to get into stock talk. There's a couple of company earnings I want to look at, and there's a few corporate news items that grabbed my attention here today. And then Tyler, a little bit later in the show, I wouldn't mind you showing me some of the picks you did last night in Trade Masters to bring home the belt.
Sure.
Walk me through some of the ones that you did. Let's take a look at Bitcoin here. Obviously, we're pushing towards the all-time high. It's been a juggernaut, U-shaped recovery here off of the chart pattern at the 20 MA. Now we're up almost $12,000 from 45,000 pivot point to where we are here today. Tyler, breakout still would be a breakout and in play. What's your read here?
This is constructive. Up 4 bars, sitting at resistance. You want digestion, right? It's like you got. I like to picture this as a sponge right here. Resistance is like a sponge. There's a certain amount of supply sitting up here, and you're just chewing through that. Once you chew through it, you go, right? You eat through all the selling pressure, and then it continues higher. You just don't know how long it's going to take. I wouldn't be surprised if it takes 2 days because it's Bitcoin. But any kind of basing up in this area is constructive. Today is what we call an inside bar, an inside day. We haven't broken below yesterday's low. We haven't broken above yesterday's high. So for all intents and purposes, it's just digestion, congestion, a base, call it what you want, but it's constructive. And any kind of chop up here, let the moving averages catch up. I think it just sets the stage for the breakout.
Mm-hmm. Yeah, it's looking very, very healthy and constructive. All right, let's go into stock. Go ahead, Matt.
Did you guys look at the 30-minute chart on Bitcoin?
We haven't, no.
Yeah, Tyler, you're talking about it basing.
Mm-hmm.
Look at the 30-minute base on Bitcoin right underneath that breakout channel.
Yeah, it's very nice.
I mean, that you don't get that type of signal on Bitcoin a lot. I don't think, like, if you got that over the next 5 days on Bitcoin, that would be beautiful. But that's what you're looking for, and that's setting up pretty good right there. That's a great day trade setup, guys.
It's looking really good, actually. Yeah, I like that. All right, let's move into stock talk here next. And Matt, I do think there was a couple more companies that had earnings today that from the previous few days, I believe. Did you?
We got a couple. We can quickly. Yeah, we got a couple. We got JD, we got Oracle, we got AMC. Let's take a quick look at Oracle, and I'm gonna do earnings roundup fairly quickly here, Tim. Oracle basically puked up the last week. So front running, be damned. Don't do it again. Front running earnings is not a good thing. It's only happens when we can catch trends. This was bad. Oracle basically said, front runners, you're going to have to pay the piper here. We're going to go back to what we were before the earnings front running. Their numbers support that as well. Oracle came in at 1.16, a slight beat on EPS numbers. Revenue came in at 1.11. The expectation was 111. Revenue came in line at 10.1 billion. Revenue increased 3% year over year, and Oracle warned about the same type of headwinds we've been hearing from other companies. Again, I didn't take anything from the report. I think this just puked up the front running, and that's it. I don't think the investors care.
Yeah. It ran into this report from 65 on that breakout all the way to 74. And so if you don't smash it, obviously getting a little profit taking here does make some sense. So.
And it's Oracle and not your next fat stock.
Yeah, that's right.
That's a fairly big front run for a company like Oracle. But again, for me, takeaway is nothing. Like literally, investors don't care. The investors are fine. This just puked up the front running is all it did. Next, let's go to JD. JD comes in at 9 cents a share versus expectation 19. Revenue came in at 34.4 billion versus 33.9. Revenue increased 40.2% year over year. Raw numbers, EPS beat, EPS missed, revenue beat. Lukewarm on the raw numbers. Revenue came in 40.2% year over year. That's going to be a fairly impressive number. But again, the EPS numbers are the number one thing here. Not very good. This looks like a bearish retracement that could retest that previous pivot. So I would shy away here from JD. And then you have AMC, Tim. AMC, very popular meme stock, right? Is that a thing? Is that what we're going to do now? Meme stock? Very popular meme stock, right? GameStop being the meme stock. AMC, kind of second position there, perhaps, for the meme stocks. AMC reports they don't know what they're ever going to do to make money in the future again.
They got to sell movie tickets, right?
I can give you the raw numbers if you need. Like that path to the economy better reopen up. They better get it right. Let's just put it like that. Guys, we're a year into the pandemic. A year. Yeah, like literally a year. We're anniversary type thing right now. And AMC year over year growth minus 88%. Year over year growth. We're a year into the pandemic. Year over year growth minus 88%. Raw numbers just garbage. Puke it up. Puke more. Garbage. Negative 315 on EPS numbers. Expectation was garbage at negative 28. It came in worse than that. You better hope for a lot of good things on AMC, guys. Because that's all you have. You have no fundamentals. You have nothing here.
You just have hope.
You have no ability to make money in the future.
And memes. You have memes.
You have memes. The investors, and by the way, I always do, are the investors happy or sad? Nobody invests in this company. This is a meme stock. The investors don't care. They invest in Apple.
Yeah. Any other earnings roundup?
No.
All right. A couple other quick corporate items that I saw grab my attention. Boeing real quick or Southwest, either one. They're both tied to this story. Obviously, there were those tragic, terrible accidents that killed like 346 people a couple years ago that made the 737 MAX get grounded. It does have approval to
accidents.
Not accidents. They were crashes and it was terrible.
Accidents.
Yeah. Listen,
accidents predisposed. Boeing doesn't know things.
They were culprits in the whole thing. You know how we both feel about it.
They have legal liability.
Yeah, and ethical and moral liability to all of it.
Well, legal liability implies moral and ethical liability.
Oh, right. But they are going to continue to try to sell those planes. They did strike a deal with Southwest here today. It seems like they're moving forward with it.
Nobody's going to buy your planes. Southwest is going to buy your planes.
Yeah.
And I know I will never fly Southwest again.
Yeah. Yeah. No, I don't love that airline. I know it's a popular one. That's not a popular opinion. Not my favorite one to take on trips, but I know a lot of people do.
Oh, I would have flown on Southwest before they bought Boeing planes. Tim, honestly, I don't even know what the takeaway here is. Boeing has not been able to find a buyer. Southwest has been their number one buyer for a while. And if I'm Southwest, They probably got a really good deal.
I was just thinking the same thing. See, here's the problem. We don't know what price they paid. You know, we don't know.
I'm not going to rip on Southwest. They probably got a really spanking Warren Buffett style deal. They got the Warren Buffett Bank of America deal, bro.
Yeah. Yeah.
Yeah.
Tyler, is there anything in that chart worth noting?
On a pullback, I mean, I sure as heck wouldn't be chasing right here. It's constructive. It's in an uptrend. It's above all its moving averages. It made a higher high on increasing momentum. It had good volume. It was a breakout. I think this is a new post-pandemic high for Boeing. So for all of those reasons, it's constructive, but I wouldn't chase it. I'd settle and wait for a dip if you're a buyer.
Yeah.
Dude, Boeing's got the Japanese economy feel to it that in 30 years from now, you'll finally be able to achieve the all-time high in Boeing.
It's going to take some time. Yeah. I mean,
in 30 years from now, my son Tanya will be like, I finally achieved break even on Boeing.
Yeah.
Fantastic.
That's funny. That's funny.
Dude, at some point you got to realize, okay, is this, have they reached their peak? Like Tim, as a human, you're 41 years old, right? You got another 40 years ahead of you. Like at some point you're gonna be like, have I reached my peak?
Mm-hmm.
Boeing might have reached their peak.
It's possible. I mean, the way that they've been approaching sales in the last couple of years has not been profitable. Obviously, they've had some of the most terrible numbers they've ever had in the history of their company. The stock has been beaten down. We don't know what the future of travel looks like completely, if it ever is going to come back to exactly where it was in the past. It's a good question. It's a fair question. I think a question anybody who does invest in Boeing has to work through and think through what this future actually does.
Well, yeah, and you can't be like, oh, well, I'm just going to treat Boeing like AT&T for the next 20 years and compound dividend, right cover calls. Nah, it's too volatile, too much news to it. Hey, newsflash, I don't like Boeing, everybody.
Yeah.
Not a fan.
I think anybody who's been watching the show, we do know that, my friend. No, and definitely rightfully so. Quick one though, Bumble real quick. I didn't really care about the numbers. I just want to note they did have their first earnings report. After a company who does IPO have their first earnings report, I usually at least am willing to put them on a watch list. I don't know how you guys approach that with that, but Matt, what are you seeing here in this chart, just from the chart response here?
Nothing yet, honestly. Positive earnings response, and we need to give it some time to work out technically, but you're going to start seeing moving averages on that chart really soon. And when you start seeing those moving averages, you're going to start getting a little bit more forward projection technical analysis. I think Bumble could get on our watch list. I think it's a little early to trade with probability analysis. I do. I think you're hoping at this point, but yeah, get it on a watch list. Start getting familiar with the company. Yeah, I have no problem with that.
Tyler, what about you? After first IPO, we get some moving averages, we get some data. Are you interested in this stock?
There's so many good trading stocks right now in the market that there's just an abundance of.
I'm kind of with you, Ty.
And so, and especially, I think there's been a lot of new IPOs, right? So we like that as traders. We got a lot of more ticker symbols to trade. I don't know that there's a rush. I don't have any fundamental affection towards this, and so I think.
Well, can I give you one fundamental? Comparable that doesn't make sense, but we'll just give you a little taste.
Sure.
They only lost 1 cent a share on the first earnings report.
You know what? I was going to bring that up.
After 150 earnings reports, AMC lost 315 today.
I know.
If
you like AMC, you better love Bumble, right?
If you like AMC, the Bumble should be your meme stock. Like it only lost 1 cent. Man, to the moon on this. That's
almost like making money. That's almost like making money.
At some point, we're just going to start saying that. Like, it only lost 10 cents. It should go up 10%.
Yes.
That's funny. All right.
But no, their earnings report was a fairly positive one for the first earnings report. It came in at 1 cent a share on the loss side. The expectation was a loss of 12 cents, so actually a really good beat on EPS for Bumble here. Revenue came in line and guidance was reaffirmed. So for the first earnings report, honestly, a pretty decent little first earnings report for Bumble.
Don't you feel like it would have been pathetic if it was a bad one? It's like, dude, you just went public. This is what you went public at a time where you knew your first earnings report was going to just be horrific. Great job. Good timing.
I've seen a few of those. Yeah, like it's just like, oh my God, you went public just to get that public money.
Yeah.
But no, Bumble here. I think it's a pretty decent report on their first get go here.
Mhm. Yeah, I agree. All right, guys. That's it from the news perspective for me here today. But Tyler, one thing I was interested in, because I didn't get to attend Trade Masters last night, is you won. You brought home the crown. Maybe you could flash us through the winning picks you had last night for the show and kind of talk about them.
Yeah. So in preparation for those, usually it was actually pretty easy this go around to prepare. I go through my entire watch list. I went by sector. Actually, I didn't go by sector first. I went through my entire watch list. I flagged the setups that I liked, and then I sorted by sector so that I could get an idea of where I'm at. I always like to diversify the bets. I feel like if I threw out 5 energy picks, I'm not being creative enough. I want to win. So what I did, there was enough good setups in different sectors that I basically picked a different stock in every sector. And Mark's all about themes and narratives. And so sometimes I feel like the more you talk in explaining your pick, the more likely you are to win. One of these times, I just want to be like, I'm going to say maybe 5 words when I give him the stock.
No, you will lose any game with Mark or Matt. If you don't have detail, you'll lose.
I know. It just okay. So my first one, this goes with crude oil, energy, rocking. Energy had a pullback. So, I ran through the chart of crude oil with that little 2-bar dip with yesterday's reversal candle. I ran through XLE, which had a little 2-bar pullback and pop. And so APA was the bull retracement that I picked. There was actually quite a few. DVN was another one that had a nice little retracement. And Mark is fond of his girlfriend, as you would imagine. So I put the little 9 EMA right on there. And it's just perfect. It had a nice breakout with increasing momentum. The volume was good on the breakout. It had a nice little pullback on average volume, no major distribution. Buyers emerged at the 9 EMA as they have for the last month. Had a bullish reversal candle yesterday. So very simple, easy bull retracement pattern. Either buy stock because it's a cheap stock, or I also looked at a bull call spread that had a really good ROI. So that was the first one.
That is a very, very solid pick. I love the chart setup, and for a retracement, when you have the lighter volume coming into a doji on a moving averages, where there's an old pivot, that's a strong pick, Ty. Absolutely. Yep. So I can see why that one had the judge's favor there. What were the other ones?
All right. So the next one I mentioned, we have commodities booming. We have inflation pressures. So I was looking at the commodity space, and Alcoa yesterday had a really good pop. And that I used as kind of my poster child for that. They're coming after these mining stocks, these metal stocks. Alcoa moves with aluminum and that whole space. And so it caused me to relook at FCX. We brought this up earlier, but that pause in copper was constructive coming into this week. And so with FCX in particular, the pitch was this. I really like the shakeout that FCX had last week on Thursday. I was on the halftime report, and we actually talked about this. Not the shakeout, but just the fact that FCX was getting whacked. I liked the fact that it had a break of support and then came right back up. And it's just kind of been consolidating like copper ever since. And so we took a look at this last night, and I said, I think it's paused for long enough. Obviously, I didn't know it was going to pop as much as it did today, but you could have put yourself in a position to at least anticipate some type of upward move. We were looking for a trigger over $35. I offered him either doing the 30 naked put, which had about a 25% return, or the 35-40 bull call spread. Obviously both are working today, but that was the second one.
Wonderful day to have FCX as your pick. Obviously, it did actually confirm breakout here today. We're up 7%. I mean, if you weren't catching this right at the open, or right on that trigger, though, do you think right now, do you have to wait for something else, or do you think there's still something there as far as a daily entry?
If you look at its history, I mean, it's been forgiving if you had to chase one day after the break. So I don't care as much chasing on this one as I do on other stocks, just because of how strong it's been. I mean, if you want to hedge your bets, just do a partial position if you want some skin in the game. But look, it has not paid to fight this. I I would not buy it now if I was going to, get freaked out if it pulls back below the 9, So I would only do it now if I was willing to give it some room.
I gotcha. All right. I'm loving these so far. I can see why, Mark also liked that pick as well. What else you got?
All right. So the next theme was GM has been riding the whole EV movement, electric vehicle movement. But unlike Tesla, NIO, Workhorse, some of those other degenerates in the EV space, this did not get beat up with everything else. So you got the tail end of the whole EV deal. Plus, it's been rebounding on economics. It's a cyclical stock. People buy more cars when the economy is doing well. So it's been riding those two themes, and it's held up well over the last couple of months. And I like the weekly chart breakouts have been buys. This had a really good candle yesterday and was just testing the high. So was doing an upside breakout in this, and I looked at a 57.50, 62.50 bull call spread. I had a pretty good ROI. Didn't trigger today. Still like it though. So breakout over 57 and change.
Makes sense to me. Yeah. And they have been riding that new movement. Obviously, all the headlines we've covered on GM over the last year and a half to report, a lot of them are around EV or building new plants for battery production or whatever it is. Yeah, absolutely. Okay. So that was 3, I believe. What was number 4?
All right. So 4 was financials. The financial sector has been hot, as we know. It benefits from the whole rising rates. So tech's pain has been financials' gain. I looked at all the financial big boys, and JP Morgan had a nice little mini ascending triangle or high base, if you want to call it that. Strong just has not closed below the 9 EMA this entire time, right? Well, the rest of the market's been getting torched. That tells me it's only a matter of time before it breaks out and goes higher. So just an easy breakout trade, bull call spread for me, 155, 160 for April, had a pretty good ROI.
Yeah, definitely a good setup there. And actually, you're not missing too much here today. Still kind of just hanging out right where you were looking at it last night. So then number 5 to round it out.
At this point, I'm like, I got this in the bag. It doesn't matter what I say, 5th round. So I threw out a tech pick, bear pick. So healthcare, XLV, XBI, biotech, technology, XLK. Those are the 3 sectors that look the ugliest. So I said, if you'd like to lose money, if you want to tempt with bear trades, CRM has got one of the best bear setups for a couple of reasons. Number 1, fundamentally, it's in the doghouse the last 2 quarters. Think about this. This is November 4th. The entire market awakens and shoots to the moon. CRM does jack. It's been riding the pine for 4 months. Hasn't done anything. Last 2 earnings announcement, it's got punched in the face. So they don't like where it's at fundamentally right now. From a technical perspective, it's below all the moving averages. It had increasing momentum on the last drop. Big distribution coming in. Broke some significant support levels. And if you look at it yesterday, which is when we did the Trade Masters, it's heavy. It's heavy. It's trying to rally, can't do it. Trying to rally, can't do it. Trying to rally, can't do it. Closed at the lows the last 3 trading sessions. Okay. So it's like, well, look, I mean, if I'm going to short something, this has a pretty good bear retracement right at a declining 9 EMA. If it breaks yesterday's low, I like the 210, 200 bear put. And as far as bear trades go, that's the type of bear trade I would take if I was going to do it. Nice thing is it didn't trigger today, so it's not like it would have got snookered in, but quite frankly, the same analysis applies today.
I think here's the thing. I've been a long-term investor in CRM. And when you see a chart pattern that's not in your favor in the short term, you kind of, you always have your own book in your mind. You're like, you cringe at it a little bit, but your chart read is not incorrect. I will grant you that there's no doubt about it. And I'm sure that Mark gobbled up the idea of having one bear in there in case the market was going to slow down or whatever it is. All in all, though, I think the first 4 probably could have won you the whole thing, because I loved those setups. I got no critique on CRM. You're obviously reading that chart correctly. You're wrong today, though, young man. One day you are wrong here today, but it is.
Look, I mean, my counterpoint would be I'm not wrong because it didn't trigger. So
Tyler's looking at it technically. Tim's speaking his book.
Yep. That's right.
Okay.
That's exactly what's happened on the CRM. Although I will say this, Tyler, really good 5 setups for the logic behind why you chose them, going into different industries, different sectors, thinking about that process. That's exactly what you do to take home the belt. Congratulations on the win last night, young man.
Congrats, Tyler.
Thank you. Thank you.
Yeah, we're gonna have to find a new challenger for
The
the
heavens
champion.
and the worlds and everything is aligned when Tyler Craig has the bell to tackle trading.
I told you that
Yeah.
you want the market at new highs, guys. You just keep the streak alive.
Listen, Tyler's a perma bull.
That's right. That's
He
right.
drives markets up. He leads one crew.
He doesn't know what one crew
Doesn't even
is.
know it yet. How does he not know it? This, like, Tyler, I thought the 100 was like your wheelhouse, bro.
Hunter, are we is this a Destiny reference now?
It's similar
No.
to the kind of feel of the way you play Destiny. It's not a video game. It's the 100.
The 100 is a future dystopian story of the end of the world. And one crew is the crew that bonds together to fight for humanity.
Ah, gotcha. Okay.
Yeah, you can Google it.
I'm Googling it right now. I'm doing some research.
It's a show Tim really likes. It's a fantastic
What's it? What do you watch it on? Hulu, Netflix?
I think it's on Netflix or Hulu. I don't know.
Netflix is where I've been watching it. Yeah.
Tim's like, I watched it on Netflix, then I watched it on Amazon. I've watched it a few
I
times.
think it's a couple of different places actually.
Done.
That's right.
It's just a dumb show that Mark gave the analogy of one crew during the pandemic last year. It's like one crew only sends the market higher. One crew, so it just became a thing.
Okay, so this is not even one crew. This is WONKRU. One crew.
This is however you want to say this. It is one crew.
Okay, I get it.
Yes, it's not.
I thought it was a
boy.
Honestly, I thought it was a boy band at first.
It is.
That's what I thought it was.
Backstreet's back, all right. We're not going down this path. All right, guys, that's all I've got
Christmas
here.
special, anybody?
Dude, I know you love that city. Don't get me started. Love the action in the markets here today. Thanks for the analysis, everybody. Let's start getting final thoughts here, wrapping our show up. Guys, we're pushing towards an all-time high. By the way, while we're talking here, Bitcoin just touched its all-time high as well. Risk on assets are celebrating here today. Matt, you first, actually. What are your final thoughts for the team out there?
Ooh, I get to go first?
Mm-hmm.
Can I share? Can I steal your screen time? Is that?
Yeah.
Can I do that? All right. Hold on a second. A year ago, what was happening a year ago?
That was the very first day the World Health Organization put us into called it a pandemic.
They called it a pandemic, right? And before that, you guys remember we were all talking about, okay, is this what is this, right? We didn't know exactly what we were going through. We had known there was a disease that got out of China. We knew that in January. We were talking about it. If you guys remember, we were talking about COVID literally third week of January last year. Third week in January, we were breaking down the impact economically, and if this could kind of spin into something a little bit more, and obviously it did. Well, I'm looking at Amazon here, and a year ago, Amazon, broke the 200-day moving average after a short bearish downtrend that was preceded with a prolonged neutral trend. And once it recovered that price, the next 6 months was, quite frankly, historical in the marketplace. You saw Amazon do that, and you saw the S&P, the NASDAQ, and everything else do what it did from a V-shaped recovery. And I'm looking at Amazon here today, a year later, and I'm looking at a stock that has a short-term bearish downtrend that broke the 200-day moving average, that is fighting to break up above that 200-day moving average. I'm looking at that stock on the backs of a prolonged neutral pattern, right? Just boring neutral, violation of the 200-day moving average, a theme that is not supportive of Amazon, that impacts the growth side of it over the next couple years, obviously been caught up. I'm looking at Amazon a year ago, prolonged neutrality, volatility, get caught up in the short-term type of momentum right there. I want you to look at that candle right there. Okay. That candle right there broke up above the 200, retest the 200, form a high base, break out of the high base right there. That right there. The only question is, can we repeat Amazon? I'm seeing a lot of commonality here a year later in Amazon, guys. I'm seeing 6 months of neutrality. I'm seeing a bearish downtrend getting caught up in market-related news cycles, and I'm seeing a trigger point above the 200-day moving average. Can we high base? Can we break? Can we run? It's an open question on Amazon right now, but it's something that I think is at least interesting enough that we should look at Amazon. I mean, we're still talking about Amazon here, the juggernaut of Amazon. So my interest is peaked a year later in Amazon when nobody's talking about Amazon. Leonard, when's the last time somebody was talking about Amazon?
They've not been in the news at all. Yeah.
Nobody? Like anybody? Okay. I'm talking about Amazon. I think it's interesting.
Yeah. Anytime Amazon takes an eight-month break off of price appreciation in the history of its storyline, this juggernaut that is a revenue generating machine at this point.
I get it, but that's not my point. My point is you're seeing a very similar technical condition and a price action condition. And can we see the same degree of pattern establish itself that followed the last time we broke up above the 200-day moving average, that high base, trigger above the moving averages, now all they support it. Yeah, and again, this is a bearish downtrend at this point with the bearish retracement hesitating at the 200-day moving average. It needs some work. Absolutely, that goes without saying, but I do think it's interesting.
Yeah, it's an interesting one. Get it on your radar out there. I love it. I love it. Tyler, any final thoughts from you here, sir?
Listen, I'm on top. That's all that matters. That's all that matters. Okay.
The Russell 2000 is at the all-time high, and Tyler won Trade Masters. It does not get better for Tyler Craig than today.
That is true.
We were talking about peak life. Tyler might have just hit it.
He just hit it here today. Well, he's expecting more.
Hey, just waiting for my stimmy check, boys, and then it's all good. That's the final piece, and then the world.
That's the last. I love it.
I think you got to buy your kids something with that check, Tyler. You can't just go golfing. You can't just
listen. Everything I buy is for my kids. Let me have my moment, okay?
Right.
Tyler, you can get one share on margin of Amazon. Go get it.
I like it. I like it. All right, guys. By the way, that is our show here for today. We do this show each and every day. The markets are live, 12:30 Eastern. We go live at that time as well. We'll be back tomorrow. Coach Breakout Frank, he's always here on Fridays, and he'll be bringing some of his analysis, his picks. It's going to be interesting to watch this price action head into the week. It's been a really strong week for the markets, starting last Friday, carrying through to right now. A good 5-day winning streak in general across broad indexes. So we'll see what happens here on this carry through tomorrow. Have a wonderful day. Go back and watch Trade Masters. If you didn't catch it last night, catch the recording. It's on our YouTube channel and our videos. You can go find it. And outside of that, Matt, any last thoughts for the team? You want to just say, give them a big wave?
No, I forgot my video was down.
That's all right.
How are you guys?
We're doing fantastic.